In today's video, we're going to be discussing why you should consider running a portfolio of trading strategies in a prop firm challenge and how you go about doing that. So you may have seen some of my old videos where I've discussed doing a rolling account approach with one bot, one account. In today's video, I'm actually going to be showing a different method which is equally as effective to pass prop firm challenges. So the one bot, one account method tends to be the most effective if you're trying to be fast and aggressive. But if you have maybe a larger prop firm account, or you're maybe more of a conservative trader or investor yourself, the portfolio approach can actually be an extremely interesting method for you to apply yourself. So really, why would you run a portfolio, and what does a portfolio mean? Frankly, a portfolio is just a collection of bots. So imagine you have some which are trend following, some which are mean reversion, some which trade currencies, some which trade indices, and you put them all together in one account. And this would be contrary to just taking one expert advisor, putting it in one account and letting it run. So why would you do this versus just the simple tried and tested approach of one bot, one account? And really it's so that you can have more consistent performance across market regimes. And essentially if you have some bots which trade different strategies, in most market conditions, something should make money, which will generally smooth out your equity curve. This can actually not necessarily always work in your favor if you're trying to aggressively pass as fast as possible, because you might want to just put max risk on a few trades. But if you're looking to have more of a consistent, slow, steady, safe, not even that slow, like more like moderate speed, but much more consistent strategy to pass, you can use this portfolio approach to do so because you have this diversification aspect really working in your favor. And this is great for larger accounts. Like let's say you're buying $100,000 accounts or $500,000 accounts. You probably don't want to account roll unless you're an absolute baller. If you can afford to spend $500 every single week on prop firm challenges, you likely are probably trading a personal account primarily anyway. So this works well for somebody who doesn't want to have to start a bunch of accounts. They just want to buy one 100K, one 50K monthly or so and forget about it. And this can be a very effective approach for that. So how does one actually go about doing this? How does one build a portfolio? You would need to select expert advisors which trade different assets and that have some diversification aspects to them. Perhaps they have different hold times. Perhaps some are more trend following, some are more mean reversion, and really just you want bots which don't take the same trades, and you want to put them together. At the same time, if you build a portfolio in a prop setting, you have to be extremely mindful of your max daily risk as well as no hedging. So let's say, for instance, you're stacking a bunch of bots together that all trade the NASDAQ. If they all lose on one day, like you might exceed your max daily risk. And if one goes long and one goes short, you might end up with breaching the hedging rules because you're going long and short the same assets simultaneously. So ideally what you would want to do is trade different assets because then you don't have to worry about hedging. And always make sure that if you sum up the absolute max risk of all the bots together, you're still within the total daily max risk of the prop firm challenge, so that all of them can lose and you still won't fail your prop firm challenge. So that's really how you build a portfolio for a prop firm. All the kind of best practices of building a diversified portfolio still apply. However, you really have to be careful about total daily max risk, as well as to pay attention to all of the hedging rules to make sure that you really comply with everything. Now, moving on, who is this really for? I honestly think that this is the best approach for anybody who also has a more sizable personal account. If you're a trader, you have $5,000, $10,000 plus, you probably don't necessarily want to worry about managing 200 prop firm challenges. Or particularly if you're somebody who has $100,000 or $50,000, you're more of a moderate net worth investor. In that case, this is probably easier for you just because you're likely a busy guy who has a bunch of different things going on, and you simply want to stick a few challenges in a VPS and forget about them alongside most of your larger, broader portfolio accounts. Frankly, this approach involves far less work. You don't have to roll accounts, you don't have to manage so many VPSs. You can simply plop a big account on with a bunch of EAs which are conforming to the current and to the best risk parameters in your portfolio settings, and you can just let it run. So this works really well for the more busy professional who doesn't necessarily want to be super proactive. If you're a younger guy who's looking to do this more as a business, or you're just somebody who's maybe a bit less affluent, then being a bit more aggressive and really account rolling could be more for you. So it comes down to your situation in life as well as your financial situation because perhaps you're looking for something which is more set and forget versus more proactive. So really, guys, portfolios give you an experience in a prop firm challenge, which is much more akin to trading a personal account. It's way less work, it works well with larger accounts, and also it tends to be a lot easier from a psychological perspective because you don't have to have starting constantly, you don't have to be constantly starting new accounts, you don't have to be seeing losers and winners, and you get a lot more psychological safety because you always have something which is usually making money. So overall, I hope you guys found this video interesting. Drop me a comment if you'd like to see how we're running portfolios, because frankly, we've switched most of our accounts to this, and most of our clients are doing this just because most of our clients, I'd say, tend to also have personal accounts, and they prefer something which is more set and forget. So guys, hope you have a wonderful day, and yeah, drop me a comment if you have any questions, and I'll see you in the next video.